Welcome to another episode of Educating Homebuyers, the podcast. I'm your host, Brady Haye, and my mortgage team has over 9 years of mortgage experience here in Des Moines, Iowa. Whether you're buying your first home, upgrading, investing, or simply just curious about the market, this show is all about helping you and future homebuyers feel informed, educated, and comfortable as you take your next step. Each week, I sit down with real estate professionals, past clients, and local experts to unpack real stories, real advice, and what you actually need to know when buying a home today. Without further ado, let's get into today's episode. All right, gang. Now this is a different format than you guys are used to seeing. As you can tell, or if you can't tell, this is literally just me today. But what my heart behind today's episode will be is that today, or really as of 2 days prior to the posting of this episode, I have reached 10 years of being a mortgage lender, which is really crazy to even think about. Other than my gray hair, I still feel like I'm fresh out of college. But what I want today's episode to be is I'm going to dive into specifically 10 lessons that I've learned in the 10 years of being a mortgage lender. And what I've found as I've developed these lessons is these are all things that I've learned that I think you guys as listeners and potential home buyers really can take as guidance into making your home buying experience better, right? And that's what my heart and my vision is as your trusted mortgage advisor, is to be just that, right? The person and the really the team that allows this experience to be a positive one. So I've created a guidebook, and that's going to be available for you guys. That really it's an inside look into these 10 lessons that I'm going to go over. In order to access that, there will be a form in the description that you guys can have. I've got it here in front of me. I'm going to be referring to it often during the episode today. But that's really what I want to do today is just go through this guidebook, go through these lessons, things that I've learned to hopefully pour into you guys, over the last 10 years to make your home buying experience better. So to kind of start off, I'm going to read this little intro that I did, and then we'll go into each lesson. But the intro that I typed basically just says, after 10 years of helping families purchase homes, I've learned that a mortgage is never just a loan. It's a life moment. It's a season of transition. It's excitement, and frankly, sometimes uncertainty. My role as a mortgage lender has always been to simplify what feels overwhelming, bring clarity to what feels confusing, and ultimately make you feel informed, educated, and comfortable, which is what my tagline has been. Over the last 10 years or decade, I've sat with hundreds of home buyers and guided them through some of the biggest financial decisions they've ever made. And I've had the opportunity to work with first-time home buyers who are nervous about taking the leap, to growing families who are in the search for more space, to investors looking to build wealth, and past clients returning for years later to upgrade their living situation. Ultimately, every situation is different. Yet the principles of creating the experience always stay the same. My clients have shaped this guide, frankly, more than I have. It's their trust, their feedback, and the real life experiences that I've just frankly been able to navigate with them that ultimately matters the most. Some of the things that they've given me feedback on, Brady and his team took the stress out of purchasing our dream home. We felt heard and supported the entire time. Clear to close weeks ahead of schedule. Incredible team. Those are the things that I strive for, right? Like my hope is, and I tell all my clients this when we go through their consultation, is that at the end of the experience, you're like, man, I am so glad that I called Brady and his team because ultimately we ended up with the home that we never thought was possible, or if you did think it was possible, ultimately that it was a smooth and seamless experience. So that's really the feeling that I hope all my clients have when we sit at the closing table. And these 10 lessons that I'm going to go through today are just a little piece of how we've helped get there. So we'll start with lesson number 1. Lesson 1 is that the front end of the mortgage process determines the outcome. So the more work we can put in up front, when the very beginning of the process starts, the smoother the back end will become. And that's really the lesson that stands amongst all of them. So if there's one lesson you can take from all 10 of these, is that is the most important. So while it might seem like I'm asking for a lot up front when I'm asking for, an application and documents, the more information that I can get as your mortgage lender on day 0, the better your experience will be at the end, because I can discover any potential red flags, right? If there's anything I've learned over 10 years is I've ran into almost every possible scenario. And my hope is that those lessons that I've learned and the other things that I've navigated with clients helps make your process easy. So, and frankly, a lot of the stress that clients feel is that last minute stuff, right? Anytime you're kind of scrapping for things at the end of the process, that becomes more of a stressor for people. And if we can do a lot of that front end stuff before you ever even write an offer on a home, that's going to make it so you don't have as many of those things. Now, I'm always transparent. There's things that come up at the end of the process. I can't, make that an impossible reality. But if there's anything that I've learned over the last 10 years is that the mortgage industry is very highly regulated. And if we as a mortgage company are asking for something, it's not because we sleep better at night when we ask for that stuff. It's just because the places that we sell the loans to, whether it's Fannie, Freddie, FHA, the guidelines are created, and we just know those guidelines, and we're trying to simplify it. So if there's anything I can teach you is just be transparent about your entire experience. Any of your financial stuff, we have to know about it, and the more we can know on the front end, the better. And that's the lesson that I want you guys to take home for sure on lesson number 1. Lesson number 2, know your budget, not just your approval amount. So you guys have heard me talk about this on other episodes for sure, but I think your budget as a home buyer is far, far more important than how much I can approve you for as your mortgage lender. And I think that one of the biggest misconceptions ultimately is that your pre-approval amount should determine your home search. And, I get asked this question all the time is, how much am I approved for? Well, it's not that simple, right? And frankly, I don't ever even determine a maximum for most of my clients. It's not like I plug in, when you apply, it's not like I plug in like, all right, here's how much they make and here's how much their credit is and how much their debts are. Here's the absolute maximum they could buy. And I don't want that to be the case, right? I want to make sure and identify your comfort level, which is where that buyer's consultation comes into play, right? After you guys have applied and upload your documents, you'll find if you work with me, the next step in that process is that consultation with me and my team. And we need to identify your goals from a monthly payment and a cash to close standpoint so that we can identify your goal purchase price, not your pre-approved purchase price. And so in order to determine that, we really work backwards. We start with that monthly payment. We back into the purchase price from there and identify like, okay, what's included in a monthly payment? If you aren't familiar, principal, interest, taxes, insurance, sometimes an HOA. Those things all dictate your monthly budget, and it's important we work backwards to identify that rather than just starting at a purchase price and I want this, and then finding out that after you fall in love with the home, you hate the payment. So the payment is most important. We have to identify that. We have to figure out what's all included in that payment for the specific property. And another big point too is that it varies a lot from house to house. So, if you send me a home in Ankeny, the property taxes on that property are going to vary substantially from if you look at a home in Alaman or Bondurant or West Des Moines or wherever the other homes are. Taxes vary substantially, and we have to make sure we identify that case by case and know that you're comfortable with that before proceeding with a showing. And ultimately make sure that it fits into your lifestyle, right? Because we're not, as a mortgage company, going to know how many times a week you like to go out for dinner, right? Because we don't look at leisure expenses when pre-approving a client. We only look at required minimum liabilities as far as what shows in your credit report. And we compare that to, in turn, your gross income. And that's another point that I think is important to drive home is like we as a mortgage company, we're looking at that gross number that you make annually. So if you make $100,000, yes, you make $100,000 in your salary, but we all know that that's not how much gets deposited into your bank account. When they take out your taxes, your income tax, they take out your Social Security, they take out your Medicare, they take out your insurance, your health insurance, your vision, all of those benefits that you pay for out of your paychecks, you don't see $100,000, right? But from a mortgage standpoint, that's how the guidelines allow us to pre-approve you is that based on your maximum income, that's how we determine your budget. So I think that's a key point there is like, it doesn't do us any good to determine your maximum. We have to know what your comfort level is, and then we build a plan around that to help make sure that that's in alignment with your cash to close goals and how much you want to bring to the table. And if that's nothing, that's okay. We have programs for that. We work backwards to identify that and make sure it supports your lifestyle, not restricts it. Because I don't want you to buy a house, get into it, fall in love with the house, but then not be able to go out with your friends for dinner because you can't literally pay your bills. So that's kind of the heart behind that is know your budget, not just your approval amount. Lesson number 3, your mortgage strategy should match your life strategy. So no two clients are the same. I always think that's clear, is that, you guys, when you apply with me, you might make the same amount annually or even more annually than the last person I met with. but that doesn't mean that you want the same monthly payment or you want the same things in a house. So your strategy has to be specific to you guys, and every choice that you make should reflect the season of your life, right? And I think that that's a key point too, is you can't predict the future. You don't know what that's going to look like. If you plan to get married and maybe you're already married, but you don't have kids, or maybe you get a job change or a new opportunity presents itself, the future is unknown, right? And we can't make our decisions now based on the unknown. But we can think about them, and maybe certain clients have a bigger or a clearer vision for their goals than others. If you talk to myself, like, I don't have a vision for getting married right now, as much as I want to manifest that and make that a goal for 2026, is find the woman that I'm going to spend the rest of my life with. I don't have as much control over that as what I would like. And ultimately, when I meet that girl, her vision might change entirely than what mine is, right? And we have to plan for that and adjust as life comes. And so that's kind of my point, is that your life strategy is just as important as your mortgage strategy, and we have to be willing to be flexible on that. And also, I encourage clients to remember that while you might be taking out a 30-year mortgage, the odds of that mortgage existing 30 years from now is pretty slim. So one of a couple things are going to happen. You're either going to refinance that loan, you're going to pay it off, or you're going to sell that home and move somewhere else. So just know that we don't have to make this decision on a 30-year basis, as much as, yes, that's what you're committing to when you take out a loan. Know that there's ways to get out of that, as long as you understand and know what it costs to sell a home when that time comes. And frankly, you understand and know what your equity position is as well. I think equity is a very important piece that not enough mortgage lenders talk about. You have to understand that when you go to sell your home, whenever that time comes, it's going to cost you to sell it. And we have to make sure that you keep it long enough where you pay your balance down, or you do enough projects to the home where your value's gone up so that you can afford to sell it when the time comes. So lots of factors there and lots of risk that goes into that, but those are things that I help my clients navigate, and making sure that we get creative with the way we structure your product, your loan, your down payment, all of those things, so that we can make your mortgage strategy match your life strategy. That is lesson number 3. Lesson number 4, clean documents create smooth loans. What does that mean? Well, so context from a mortgage standpoint, kind of like I talked about, documents that you guys provide from a mortgage standpoint and qualification, they aren't because I want them. It's because the mortgage company that we work for, or the institution we're going to sell the loan to, has guidelines and requirements that when we qualify a client to buy a house, we can financially prove why we gave you the money, right? And the concept, to circle back on that, and the why behind why we ask for that stuff, is in the future, if you for some reason stop making those payments and you just go behind in a default on that loan, whoever holds that loan is going to say, hey, why did you give this person this loan? And why we have those documents is because we have to prove at the time of you closing on this property that you could financially afford it at that time. So that's the why behind we get documents. And my point behind this lesson on clean documents create smooth loans is there's a certain format that you have to submit the documentation in order to meet the guidelines. So for example, no pages can be cut off. So if let's say you get paper statements still, right? And you get the paper and you take a picture or you scan them and it's folded over, or it's missing information, or maybe there's a page missing, example like that, that impacts our ability to use that. And then we're going to come back to you. We're going to ask for a better or different format that meets that. Now, one thing I will tell you is that over these 10 years of me doing loans, I've seen a substantial easement of gathering this stuff, because so many banks and so many people, frankly, have switched to all online documentation. That's really helped with this lesson. Most banks now, you can get your mortgage or your bank statements online, or your mortgage statement or your pay stubs. Almost everything is available via a PDF, as long as, frankly, you're technologically savvy enough to know how to get that stuff. PDF is the best format. So if you can pull your bank statements, your pay stubs, your whatever documents we're asking for from the website as a PDF, and upload that stuff to our mobile app or email them over to my team, that's going to be the best format to get. Doesn't mean we can't accept photos or physical documents. We 100% can still use those. But that is something that's changed since I started. Is like when I first started in this industry, almost everybody was still getting mailed bank statements and physical paychecks and all these things. And the digital world has really helped clean that up. And if I could predict something, is that if I were to make this same podcast on year 20 of me doing home loans, is that I would guess that AI has frankly made this even easier. And there's a chance that, it might just automatically upload for you without asking any questions. So anyway, that's a good lesson, is that the cleaner your documents can be, and circling back to lesson 1, if you get that stuff to us on day 1, the smoother the experience is for you guys as the home clients. I think that's pretty much everything on that one. Lesson number 5, the realtor and lender partnership is critical. And this is 100% true. I think that the better you guys have a team in your corner to handle all aspects of this process, and the more educated we are on how this process works, the better the experience is for you guys. So the moment that you have a real estate agent who doesn't communicate well with a lender, or the lender doesn't communicate well with the realtor, or vice versa, the harder this experience is for my clients. So what I would tell you is like the best experience, and anytime that I'm like the most likely to get a 5-star review from my client is when their realtor knocks it out of the park too. And so working with my team, that's something we pride ourselves in, is effective communication, making sure that we're available at all hours. I tell my clients all the time, I work when my eyes are open. So if you guys are writing offers late at night, that's when I'm available, because I know and understand that real estate happens most of the time in the evenings. And so I kind of expect the same from my real estate partners. And whenever I refer a client to a realtor, I work with and associate with people who are going to provide a high level of service there. But I think that's it's super overlooked. A lot of times people will call their realtor and then they'll call their bank or their credit union or Rocket Mortgage Online or wherever you end up making that phone call to. And a lot of times the biggest deals where there's a disconnect, or if a deal falls through, is when there's a disconnect between those two parties. And so that's something I pride myself in, is effective communication. The moment that I get a client under contract to buy their home, the first thing that I do, or one of the first things that I do, is start a group chat between myself and both real estate agents that are involved, to make sure there's an open line of communication. So if they ever need anything from my team or vice versa, they have my contact information and they know that my team is handling everything, and we're effectively, taking all of that off of most people's plates. So pick a good realtor, interview a couple if you want. If not, let me know. And I've got tons of great partners that I work with as well. And make sure you're choosing the right one that's going to represent you the way you deserve to be represented. Lesson number 6, interest rate is important, but it's not the whole story. So I can't stress that enough. I think that ironically, especially from, I would say, 2022 to 2025 and potentially further, interest rates been under the magnifying glass, right? Everybody's putting emphasis on, this market we've been facing is a higher interest rate environment compared to what we were used to. It'll be interesting 10 years from now to look back on this and see where rates are compared to now. But my point by bringing this up is that it's not the whole story. So when you're choosing your team, you don't want to make your entire decision solely based off interest rate, because there's a lot of other things that you could sacrifice if you choose only the cheapest product. And I think that the transparency, having accurate numbers to make sure that they're not blowing smoke. A prime example is that often if you look online, if you read an article, if you do a Google search, you might see one thing as far as what the interest rate actually is, but they might try to hide a lot of closing costs into that picture. So that's something I'm super transparent about, is like making sure that when I'm quoting an interest rate, you understand what your closing costs are to obtain that rate. Because sometimes certain companies will make their rates seem better than others without telling you about that they're doubling or tripling sometimes even the closing costs compared to the competition. And I'm not saying that paying discount points to buy your rate down is necessarily always a bad thing, but you need to understand how long you're going to keep that loan to make sure that the benefit of that interest rate buy down, or the discount points that you're paying to get that interest rate, is able to be recouped, right? And so when you're comparing interest rates, if it's 6.5 versus 6, but you're paying $2,000 to get that, but it's only saving you $40 a month, it's going to take you a long time to recoup those costs, right? So those are things that I'm comparing, and I'm always transparent about, is we have to understand what we're doing and how we're structuring your loan to get you the best situation. So you can't just make your decision based off of solely interest rate. You have to make sure that the person you're working with is setting clear and honest expectations about how that rate is derived. Frankly, everybody's interest rate is different based on their credit profile, their debt ratio, the loan program you utilize. So a prime example, if you're going to buy a home and maybe you're going to utilize down payment assistance, right? Great opportunity for first-time home buyers. If you use down payment assistance, you can get into a home with no money out of pocket. Well, the interest rate you get on that program is going to be entirely different than, say a standard conventional loan. It's just different. And so my point by that is the last thing you want to do, and the worst thing you can do as a home buyer, is go and just make your decision based off interest rate without asking further questions about what program you're utilizing, and ultimately finding out what your goals are to drive backwards into the interest rate. Because we have to identify, like, if you tell me your number one priority is out-of-pocket expense, then we should finance your loan with down payment assistance, which may mean taking a higher interest rate than market rate in order to not have any money out of pocket. So big driving factor there's a lot of things that determine interest rate. Don't make your decision on who you work with from a lending standpoint only based on rates. I'm going to do everything in my power to get you the best interest rate I possibly can, but that doesn't mean that the lowest rate is always the best loan product for you guys. Lesson number 7, cash to close clarity changes everything. So what does that mean? And frankly, the point by that is why I do that or use that word cash to close is because it's a lot different than just down payment. There's a lot of things that determine you guys as home buyer what that final amount due from you is on closing day. And what I do is make sure that it's incredibly clear on how that number is calculated. So what that means is, at the end of the day, when you buy a house, the amount that comes out of pocket for you guys is a balancing of down payment and closing costs. And what we have to make sure is that we work backwards to find out how much you're comfortable with. Because if you tell me you're comfortable with $10,000 due on closing day, but then your closing costs are $5,000, now all of a sudden your cash to close is 15, right? So that's why it's a big difference, is like you have to be clear about how it's calculated, and we have to work backwards to set your down payment amount to meet those comfort levels. And so that's why I always start is like when I have a first conversation with somebody, I say, how much do you want to bring to closing on closing day? Because on the mortgage side of things, there are some outside costs to buying a house as far as inspection, things like that. But from a mortgage standpoint, the only upfront cost you really have is that appraisal, right? So we're going to get an appraisal done to view the home, determine it's worth what you're paying for it. That usually is paid once you've signed your initial loan documents. Other than that, all of the rest of the costs of buying a house is usually paid on closing day when you sign the papers and you get your keys. And what I want to make sure is a priority is that when we work backwards to achieve that, is that we've kind of calculated that accordingly. So day one, I ask you, what do you want your cash to close to be? You tell me a number, and then we work backwards to achieve that. The big thing that I want to drive home is that the clarity on how that number is driven is important. And one thing that I've implemented into my process is something we call our loan estimate review videos. So a loan estimate is a fancy document that a mortgage company will send you on the front end. Anytime you're under contract to buy a house, you will get this formal document that says, here's your loan estimate. And what that does is it breaks down your interest rate, your payment, and more importantly, your cash to close and your closing costs. Well, what I've done is I implement a video that goes through that document line by line. So rather than just sending you this piece of paper and saying, here's your loan, and sign it, please. That's what most lenders will do. What I do is film a video going through it line by line. So I'm going to break down, here's your loan amount, here's your interest rate, here's your monthly payment, here's your cash to close, here's your closing costs, here's what each of these closing costs are. So here's your origination fee, here's your appraisal, here's your title costs, here's what an escrow account is, here's the cushion we're setting up, here's the interest that you're going to pay. Like there's a lot of things that calculates how your final amount is due. And my number one priority as a mortgage lender is that you have a clear understanding on that before you even proceed with buying the house. You wouldn't believe the amount of horror stories that I hear when people work with other lenders. They get to closing and the lender that they worked with wasn't very transparent on how much it's going to cost. And then they find out that they are using every dollar in their bank account to close. And that's just not a priority of mine. I have to make sure that when you guys make this decision to buy a house, that you're comfortable with how much it's going to cost you. So cash to close clarity changes everything. That is lesson 7. Lesson number 8. You do not have to be perfect to buy a home. And I think that's something that people feel a lot of pressure on because, especially first-time home buyers, right? Like you're like, man, I just don't know if I have enough money saved or, if my credit score is good enough or maybe I don't have, my end-all permanent job, those kind of things. the peace of mind I want to give you is that you don't have to be perfect to buy a home. We have programs for lower credit score. We have programs that can get you into a house with no money out of pocket. And what I would tell you is that as long as we set the right expectations and we do things to improve your current situation, if you are struggling with a lower credit score or maybe just struggling to save money for a down payment, home ownership can actually be an avenue to improve those situations. So you wouldn't believe the conversations I've had over the last 10 years where, clients maybe come to me and they're like, man, I really never thought I was going to be able to buy a house. We get them in, they accomplish this goal. And then, over let's say they were one of my first clients, right? And over the next 5 years, they pay down their loan balance, right? And having that mortgage on their credit helps build that score, because every monthly payment you make when you have a mortgage, that's going to help build your credit score, because credit is a balance of positives versus negatives. So when you add another liability on your credit that you are taking good care of, your credit score is going to go up, and the same thing with savings, right? So right now you're probably paying rent, right? And if you switch that rent to being a mortgage, if you make that mortgage payment every month and then you sell the house 5 years later, guess what? You're going to have a pretty nice equity position, because hopefully your home value's gone up and hopefully your principal balance has gone down. So when you have those two things happen, you wouldn't believe the first-time home buyers that I get into a house with little to no money out of pocket, and then they sell their home and they've got over $100,000 in equity, and then they're able to upgrade and move into a home that's bigger and better for their family or their new lifestyle, and maybe even not even use all of that money towards their down payment, and now all of a sudden they've got money in the bank. Like, that's such a cool story that I've learned over the years. And my point by bringing this up is, like, don't ever feel like you're going to time this up where you feel perfect, like now's the right time to buy a house. What I would tell you is that if you have a conversation with me and we determine like now isn't the right time, I can help you put a plan in place so that we can get to that point so you are comfortable. But just know you don't have to be perfect to accomplish this goal, because it really never exists. Like, perfect doesn't exist. So feel at ease at that. Number 9, clear communication creates confident home buyers. And I've really kind of talked about this a lot already in these, but I think that communication on both sides is incredibly important. And that's more than just me communicating at a high level. I would argue that it's just as important as you guys as a home buyer communicating with me at a high level as well. So the more transparency we can create, the more openness of lines of communication. And frankly, what my hope is that you guys feel confident and comfortable reaching out to me. So if you have something you're concerned about, or you want a change made, or you're not sure and you just have a question, I want you to feel comfortable to reach out to me, because the more communicative you are on that, the better the process is for you and for me on my side as well. So that's my hope behind this, is that, ultimately, if there's anything I've learned over 10 years, is the people that are the most satisfied at the end of the process are the people that were communicating with me at a high level. And I get often, I'll have texts or the first thing somebody will say when they call me or text me is, I don't want to bother you. Well, the good news is you're not bothering me. I want you to reach out, because I'd rather do that than you just sit and wonder, in your own head, or assume, because if you can openly ask me those questions, I can help you get to the bottom of it. And at the end of the day, my job is really kind of my favorite hobby, in a sense. I really do love what I do, and I want to be a resource for my people, because what allows me to sleep better at night is those positive experiences and getting the positive feedback from people. And so that's why the communication is so important. And a great mortgage experience really includes you guys understanding what happens at every stage. So every step of the process, there's a lot that goes into home buying. I'm not going to go over it in this meeting, but I think that that's a key point, is like, I want you to feel informed about every stage of the process, being told about what's going to happen, what's required of you guys as home buyers, because it's a team that we have to create. And the more transparent I can be about what you're going to have to provide, the easier it is, and there's no surprises when that time comes to request those things. Being timely on updates and really just response time, I think that's underlooked, and not saying it's one of my better traits, but I'm on my phone all the time. And because that is the case, I'm able to get back to my people really quickly. And I get people that joke with me often that I answer on the first or second ring when someone calls me, because I'm on my phone all the time, and I want to make sure you're informed and comfortable every step of the way. And you have to know the difference between a normal situation and concerning situations. And if there's ever a problem that will come up or does come up in your home buying process, not only am I going to make you aware of the problem, but most of the time, knock on wood, I'm going to already have a solution figured out on how we can fix that problem before I even make you aware of it. But ultimately, and why I've taken this like casual approach to lending, you don't ever see me wearing a tie or a suit coat or anything like that, is because I want to be someone who you can comfortably reach out to and not be intimidated by. Like, that's always my hope, is that I die on this hill of I'm the most like approachable mortgage lender in the game. That's really what I want it to be. But that's really the heart of my team, is like this communication is really what drives my day-to-day process. So clear communication creates confident home buyers. The final lesson number 10, is market timing is far less important than personal timing. So I think that's a key point, is like, you guys trying to time the market is a waste of time, because there's no perfect time. There's going to be no perfect interest rates. There's going to be no perfect amount of money in the bank. There's going to be no perfect job you're going to have. There's going to be no perfect credit scenario. Trying to time the market is going to cost you more money than when you want to time your lifestyle. And that's what matters most, especially when buying a primary residence. Now, buying an investment property, I would tell you that opinion is a little bit different, right? But when you're looking at buying the place you're going to live, what matters most is your own personal timing. We have to buy it on your timeline when you're comfortable. And why I stress that so much, because at the end of the day, you're never going to know when the right time is. But I would tell you that owning a home has just been proven year over year that it makes more sense than renting long-term, as long as you're comfortable with where you're going. But on the flip side of that is that renting is not a bad thing either, if you don't know what your future holds. But personal timing is most important. The best time to buy is when your budget feels comfortable, when your income is stable, when your lifestyle or family needs change, when maybe you get a raise, or you have another kid, or as sad as it is, maybe you get a divorce. Like, divorce is a very common cause of home buying. That's all things that I've navigated with many, many clients over the years. Hundreds of clients have called me over the last 10 years saying, hey, this stinks, but I'm getting a divorce, or my spouse passed away. Like, these are all things in real life situations that happen that I've helped clients navigate over the years. And you can't be ashamed of any of that happening, whether it's bad or good. I'm here to help navigate that. Your long-term goals align with ownership, right? Like, if you're a first-time buyer and you have your long-term goals finally aligned, maybe that's the right time to make the decision. Your plan to stay home long enough, you plan to stay home in the home long enough to benefit. That's what my point was there, is like, you can't make a decision quickly in this thing, because if you buy a house and you plan to sell it 6 months later, there's odds are you're going to lose in that situation. Like, it's very unique where you can buy a home and sell it 6 months later and you make a bunch of money. So it's important to think long-term when owning real estate. It's not a quick buck unless you're really truly buying it and flipping it and putting some money into it. That's a key point there as well. But on the other side of it is, you can't predict when interest rates are going to be the best. You can't predict what your future is going to look like. You can't predict, whether your home's going to appreciate in value. What you can predict is ultimately that you're comfortable with your current situation, and more importantly, you're comfortable with the monthly payment, because that's at the end of the day what your fiscal responsibility is when you own a real estate. So you have to make that monthly payment every month, assuming you put a mortgage on it. So, mortgage strategy can adjust as the market changes. We can adjust your goals. We can adjust your payments. But the right time to buy is when your life allows for it. So that is lesson number 10. So that's really everything I had. And I'm going to do everything that I can to not get emotional, but it's weird to look back on the last 10 years. Seems wild to think that, again, I still feel like I just took the last exam in college and I just graduated. And this mortgage thing is something that I kind of stumbled into, to be honest with you. I never knew that it would be a career. I never knew that it would be really a lifestyle. And that's what it's turned into. Is my job is kind of my identity. People know me as the mortgage guy. Frankly, now you know me as this podcaster, which is so corny because I don't like content. I don't like social media, but I do this because it helps create awareness for what I'm passionate about. And that is making sure my people are comfortable. So if there's anything that I can ask from you guys, is that you keep me top of mind. If you ever are looking to buy a house or refinance, or if it comes up in dinner with your friends, family, coworkers, Like that's how, at the end of the day, I'm able to support the lifestyle I want, is helping more of you guys. So what my desire is that you guys get to spread the word and feel confident and comfortable to spread the word about me. I'm never going to be the guy that's going to beg you for referrals, as much as selfishly I do need them, right? Like I need to help more people in order to spread this good news, right? And be a light in this industry, because that's frankly what I long for, is for people to feel confident and comfortable calling me, but ultimately that you're willing to spread my name and scream it on top of a mountain, because that's what I hope. And I'm thankful for this podcast. I'm thankful for the crew that has pushed me to continue to pursue this podcast. I'm thankful for the real estate agents that I've been able to feature so far, and the continued guests that I'll have in the future, because it's created this identity and allowed me to be who I am, right? And you think about this podcast and why I started it is because I don't like the concept of scripted video. I think it's corny, but my hope is that this has created a platform where you guys feel at home and are confident and comfortable with this decision to buy a house. So thank you again for your continued referrals, continued support. Here's to the next 10, 15, 20 years. I don't know. I guess I don't really want to work until I'm 100, but I want to do this for a long time. But I can't do this for a long time without your guys' support. So I just want to say thank you for the last 10 years and for the next 10 to 15 to 20 to 35 to 100 years to come. Thank you for supporting me as the Brady Haye Mortgage team. More importantly, thank you for supporting Educated Homebuyers. If you guys are looking to buy a house, reach out to me at teambhaye.com, and we'll see you guys next week.